Hey everyone, welcome back. So again, Trendline Investor here. I already released a video today. I hope you enjoyed it. So we had given 5 stock ideas, and in continuation with that, going forward, I will also be reviewing the sectors that we have in Nifty and in India. So we would start off with Nifty sector analysis, then Banknifty sector, and then metal and all other sectors that we have. Now, Banknifty and Nifty, I would also do a hourly chart analysis. And I'll try to post this analysis video either on Saturday or Sunday going forward, so that you can have yourself prepared for the week ahead in advance. Unlike the video that I'm posting today, which is a bit delayed. But I hope you would enjoy the series, and let's get started. So I want to start off with the Nifty monthly chart, which is the key index that we have in India. Right now, this is the overall monthly chart all the way starting from 1991 until now, the fag end of 2020. Now here, if you see, in 1992, just before the Harshit Mehta scam, we had a massive rally all the way from 295 to almost 1000 odd levels, and then there was this nice little crash which happened, and then we had this nice consolidation which went on for many years, right? So in fact, till 2003. So that was almost a 10 years consolidation, which happened in a parallel channel, and that's a pretty interesting fact that I'm going to touch upon today. So this parallel channel was tested 3 times, and in fact, the fourth time it tested, corrected a little compared to the deep corrections we had in the previous um, times when the price touched the channel resistance. Now, at this point, we had a breakout here somewhere around 2005 September, I think, to be precise. And from there, we had a massive rally of 165% in just a matter of couple of years, right? So we had a breakout from barrel channel, which triggered a massive rally of 665%. And then this was not a one-way move up. We also had some deep corrections. Now, if you see, this was a deep correction of almost, I think, 20%. And then again here, we have another 15-20% correction, and then another move up, and we had a small correction here. Now, since it's a monthly chart, you see those nice wicks below, which shows that there was demand all the way up. And then we had this big red candle, which triggered a massive sell-off, right? But then again, notice that this channel resistance over here turned into a demand zone, right? And then from there, again, we started moving up in a pretty fast manner. And then we've again been uh, going in a parallel channel resistance. So again, this resistance, if you connect this line here, you see that this acted as a resistance before the COVID crash, right? So now you don't have to consider this always as a single line. You can in fact drag that line a little bit down, and still the resistance would be around those levels. And now we are seeing a nice little breakout this month, right? And I'm trying to draw some resemblance here compared to this massive breakout here, right? So we had a nice breakout, 165% rally, and I'm not sure what's going to happen here, but I'm just want you to notice that we are having a parallel channel breakout. Now, this parallel channel is significant because we had the first touch point, the around second touch point, and the third touch point, and we also had this touch point here, the first, second, and the COVID reversal, which happened from the same channel support. Right now, this channel is pretty significant, and I see a breakout from here. We could have some good rallies all the way up to what levels, I'm not sure, but we would have some deep corrections on the way, right? But I'm totally bullish, as I've been all these months, and I think we have no reason to be bearish on the Indian markets. Now, a quick check on the hourly charts. Now, this is the hourly chart starting from the 7th of November and till date, right? So we had this resistance zone here around 11,000, 12,000 levels, and this resistance was taken out with a gap. If you see, there's this massive gap which happened, and we took out this resistance. Now, one point to note here is any resistance which is taken out with a gap, the price will hardly come back to that gap, and it will just trend up from there on. That's something which I would like to bring to your notice. And then since then, we had this nice move, and then small corrections. We again had a small correction, again a small correction, and then we had this nice move up all the way to 13,700 levels. Now, since then, last week we had a nice dip. In fact, a serious dip, and I think most of them were literally scared of what's going to happen next. But if you notice here, this is just a trend line reversal, right? So we had this trend line here. Now, a trend line doesn't have to always connect the lows. you need to look at what the trend has been and then try to identify where the trend lines can be drawn. I will be doing a video on trend lines soon, how to draw and how to check on trend lines. But then this acted as a key reversal zone, and now this zone becomes very important for us in the coming weeks. Now, what can happen probably in the next week? No one knows. But here are some predictions that I think might happen. I have three possibilities which I've written down here. The first thing is you see there's this nice shoulder, a left shoulder, and then we had this nice crash. This could be probably the head for this HNS pattern which we're going to see. So we might form a left shoulder, which means we might see some correction next week, and then after the new year we might start again moving up. Now that's the first possibility. Now the second possibility could be that we directly move starting tomorrow. We move up uh, with a gap up. I'm not sure, but probably without a gap up, yes, anything is possible. But again, that's the second possibility that I think might happen. The third one, it could be that the price directly crashes again. We see a slow move of serious, not a serious crash, but a fast crash down to the trend line again, or we might see some consolidation, right? Now, and this zone can get extended, right? And we see a nice little consolidation for the next couple of weeks, and then we move higher. Now, if anyone is telling you that market is going to go up 100% next week, I don't think anyone can do that. Anyone can predict. We can just follow price, and these are some things that I would be prepared for next week if I were an intraday trader and if I were going to take some trades based on this. Now that's with the Nifty. Now let's move on to Banknifty. Now Banknifty I already posted on Twitter before this reversal, so I was in fact preempting that reversal this happened. The reason is because these are two major swing points that I might consider to draw a trend line, right? So I connected this point, and I was expecting the price to reverse from here, which happened last week. And right now, if you extend this line, we are right now at resistance zone, but I don't think that should matter much. We can just go way like this, slowly and steadily. We just move up. But the key level here that I'd look at is this high, right? So around the 30,000, 31,000 level, which might be a significant 30,800 and 900. I'm not sure which level is it, but that's the level I'd be watching out for. And if you take out that, then we are going to see touch of this resistance over here, right? So that's to do with the Bank Nifty hourly chart. Now let's jump on to the sector charts. The first one is CNX Auto. Now CNX Auto had a massive move after this trend line breakout over here, right? So we broke out this somewhere in the mid of July, and then we had this nice consolidation for many weeks. Now this is the weekly chart. As you see here, we had a consolidation of many weeks, and then we had again a nice strong move for 4 weeks. Now what has happened here, right? So if you see here, we have this trend line resistance, which is extending all the way from the 2018 highs in the Feb. Then we had again here this high over here, and that's the zone which is acting as a resistance right now. Now this is a long-term trendline resistance, but what's interesting is that the price reversed from this support zone, from this trendline support here. Now what could probably happen here is we move directly up, or we consolidate here for a couple of weeks and then break out, or we break down. No one knows. But I will have a follow-up update on this depending on the price action next week and the week after that. But for now, the price looks bullish. The price reversed from a nice trendline support over here, and it's right now formed a nice wick this week. So all in all, CNX Auto sounds good as well. Looks good as well. The next one is the CNX Consumption. This is on the daily time frame because the pattern here is very clear on the daily time frame. We had a left shoulder here forming, then there's a nice fall, the covert crash, and the reversals. That was the head, and now this is the right shoulder here, which formed, and then we had a nice breakout. Right now, here the price has literally just gone in a one-way move up. We did have a dip last week, but I see that this might go up further. But one key point to note here is the trend line support again. Now this trend line support is connecting here. There was a gap, so that becomes a good point to connect the trend line. And here's another touch, here's another touch, and here's another touch. So we had 3 reversals since this trend line was formed, and any dip towards this trend line is a very, very good buy because it's gone all the way up. So any corrections or any consolidations and the price comes to this trend line, one must buy. Right. So that's my view on the consumption. And the next is the CNX Fmcg. Now this again was kind of a 3-year downward trend. So again, we had the first touch point, the second touch point, and third touch point. Now for any trend line to be valid, we need minimum 3 touch points, and unless if we don't have the third touch point, it's not really considered to be valid. And now just 3 weeks back we had this nice breakout, right? And then we had a big massive bullish candle, and then we had this dip last week, but the move has just started in my opinion. And I think ITC might lead the FMCG going ahead, or even Nestle can lead FMCG, and I see a lot more upside here and no signs of weakness yet. Now this is a very important chart which I've been tracking since many weeks now, because this is a long 12-year long rectangle consolidation in CNX Intra. And again, if you see, we have multiple touch points. Now that's why this is a valid trend line. And again, here we have multiple touch points here in the zone. That's why this is probably a rectangle. Now the rectangle, the above line is not a perfect straight line, but it's kind of little sloping, but I would consider that as a rectangle. And any breakout from here, it reversed last week from from the resistance. Any breakout from here can trigger a massive bull run, and I see the sector going, just straight up and crossing those all-time highs again. Now, I will discuss some ideas from the sector soon, but one of the ideas from the sector is, KNR Constructions, which I already discussed, and also HG Infra Engineering. So these two companies are pretty good, and any breakout here, those stocks are the stocks to be in. Otherwise, we've still not broken out. Probably we break out in the coming weeks. We will have an update on this. Now, next one is the IT monthly chart. Now, this is a pretty interesting chart. Now, with all the digital transformation happening across the world since the COVID crash, I see there's a lot of opportunities for the IT sector, and we are just entering another massive bull run like we had in just before the dot-com bubble. Right now, this is a parallel channel resistance. Now, the lower channel resistance was never tested since 2009, right? So that was the last time we tested this lower channel. Otherwise, the price has been just taking support around the middle channel, the middle line of this parallel channel, right? And it's acting as a beautiful support, reversing multiple times from this zone, and even the core crash it reversed beautifully from this zone. And now it's just picking out from this channel resistance. Now this has been almost a 20-year parallel channel, and a breakout from here is going to be really bullish. And how far can this sector go? I have no idea, but I will keep updating on this sector. Now, IT sectors, there are so many stocks already available which are breaking out. Birla Soft and Cybertech, and in the large cap space, HCL Tech and Wipro. So these are some of the stocks which I'd look at if you want to consider still for investment. There is still a long way to go for the IT index, but don't forget that there can be corrections in between. Okay. The next sector is the media. So this sector has been one of the underperformers, and it hasn't broken out of the downtrend still, even after the COVID recovery in the markets. Again, this was the highest point back in 2018 Feb, and then we had this touch point here, and now that touch point here is the long-term trendline resistance, and we are facing resistance around those zones. However, you see a dotted line over here. Now this zone was broken out. It took out this zone, and we touched and we reversed last week from this zone, right? So in terms of the strength, there is strength for the sector to break out, but a confirmed long-term trend breakout would mean only when this trend line here is taken out. So until then, this sector is still will be in consolidation mode. Now, jumping on to the metal sector, again, I posted this on Twitter sometime back. It was just a terrific move after this 2 year, 3 years breakout. Again, I've disconnected some points over here. Now it's a straight downtrend, and again we had a reversal last July, September we had a reversal, and then the COVID crash happened. Sorry, COVID crash happened here, and then this September we reversed from there, same zone, and then it took support here, and then we just reversed, and it was a one-way move up. Right now the metal sector is extended way too much, but it can be extended more. Market is irrational, and we all have to accept that. But it can also come down and test the trendline support, and that would be a really good buy entry if someone has missed the entire move in the CNX metal. So coming to the pharma, which have been bullish since this breakout in April, May, it's been one of the best performing sectors after the COVID crash. Now again, how did I identify this? It's a parallel channel which was forming for many years, for almost 5 years. It was in a downtrend, and then we had this nice breakout here in 2020 April. I think the last week of April, and then since then we had some consolidation and then just a one-way move up. But in the last 4.5 months, we saw the price consolidating. and then last 2 weeks we've seen some nice moves, breakouts, and I think this is just the start of the next move up in the pharma sectors. And I think this time around we should probably cross all-time highs and make fresh highs, right? So that was with the pharma index. The next one is the always underperforming CNX PSU Bank index. Now, this also had a good move in the last couple of weeks, but again, this was the trend line which broke out here along with the horizontal resistance. It took out the resistance, then it broke out, then it had a severe correction just after the breakout, and then it came all the way down. Now, I consider this as a retest of the previous resistance. Now, that's the support zone or the demand zone. Now, I also expect the PSU Bank to do well going forward, and it also might help the Banknifty head much higher. So one another index is reality, which is similar to CNX Intra. So I think both are kind of similar price behaviors. It also is in a long-term 10-year downtrend since 2010, and we have this long-term trend line resistance. Now see how beautifully the price is getting rejected. Now, unless this resistance is taken out, I wouldn't be much bullish in the sector yet, right? So once there's a breakout here, I will also bring some ideas or share some ideas on which stocks we should be looking at. So that was with the sectoral analysis. Now looking at the overall market breadth, so I do keep posting this CCI from charting every week. Now the last few weeks we have seen some massive number of stocks trading above CCI weekly. I will do a separate video on CCI and why I use CCI, but for now the key takeaway should be that the number of stocks which are crossing 100, which basically indicates a bullish momentum, is just increasing week on week, except for this week. So last week we had around 1,200 stocks above 100, and that has gone down to 951. Now 951 is still a good number considering the dip we had. So it is just like 200 stocks less, or 200, 230 stocks less, which is not a great thing. It's just 20% of the stocks. Now, if this comes down further next week, then that would show that the market breadth is kind of decreasing, but still some select stocks can go up, right? So the market breadth is still good. I am expecting this to continue into the new year and in the next year as well. So that's all I had for today. So the key takeaway is that the market breadth is strong. All the charts are looking fantastic except for media, and probably reality is yet to give a breakout, infra is yet to give a breakout. So I would be watching these two sectors, reality and infra, in the coming weeks. Any breakouts from here can be very powerful, and the index can go up probably 50-100%, but individual stocks can really go up 4x 5x, and that's where I think we need to be looking at if you want to create wealth. Right, so that's it for today. I hope you enjoyed this sector analysis. Do provide feedback. Do click on my channel, subscribe, and like my videos. Do share it with your friends. Follow me on Twitter. So my single objective is to help you all learn technical analysis and to not lose money in the markets. So yeah, hope we have a good week ahead. Thank you.